I've said this once before. This is likely.
I just realized the microphone is muted. You can tell I'm new to this. Guys, bringing it back. So, as I was rattling on this whole time without you being able to hear me. So, this is the MMR show. If you're new here, I've just decided to start it today. What it is essentially is bringing you guys value, experiences, and talking about financial markets, business, life, gym advice, and all that other good stuff, allowing you to understand what's going on, give you a bit of motivation, and help you build alongside with us as we build on and move forward in our life. What I am going to talk about today is the global crisis that's on the horizon, and also crypto technology and how it's being implemented into day-to-day systems, and how it can impact your business if you're in business. So what we're going to do is we're going to quickly watch this video from Jake Claver. Jake Claver is an individual who runs Digital Ascension Group and also the Family Group, and he's been talking about something called the domino theory, which includes XRP. If you don't know what XRP is a cryptocurrency blockchain, and it now has a utility. It's a utility asset which allows you to transfer money efficiently at minimal costs compared to Swift and all that other good stuff, but we'll dive into more in detail. However, what I want you to do is watch this video with me. We'll dive into some Jake points, how this domino theory, if it does play out, how it causes a black swan event to happen globally, worse than it was in 2008. And we'll pause it, dive into some points that he has to say, and then go take it from there. So if you're enjoying this, make sure to click the like button, subscribe, and also comment down below or get involved in the comment section to be able to communicate, you know, ask any questions you may have, etc. And I'll be happy to answer those. If I can't, we'll make sure to bring someone in or find the answer out for you so it's accurate. What I want to do before we start this is not financial advice. Anything you see on this show is strictly educational and entertainment purposes only. Any of my points of views on financial markets, what I do with my money, it's up to me and it's up to you as well. So please, 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 for the love of Christ, don't take this as gospel. Make sure you understand that this is not financial advice, and that you also take advice from professionals that work in the financial industry, provide financial planning, and all that other good stuff, including taxes. So, without further ado, let's rock and roll and start watching this video.
Going to be the most important call that I make in my life. XRP is going to leapfrog Bitcoin when the domino theory plays out, because it's going to be the only way that Bitcoin can survive. And we are right on the precipice.
By the way, Jake Claver's been talking about this domino theory for the last 24 months. So I don't know if you guys know, he's basically called in the industry similar to, if you guys watched The Big Short, which was a documentary made, or a movie made about this guy who predicted the housing market would crash, which caused a global crisis. And Jake is basically that guy, just regarding XRP and the global swan, the global black swan effect event that will take place.
Of a black swan event playing out that nobody sees coming. And those that are positioned are going to be able to take full advantage of the largest wealth transfer in our lifetimes. So before we get started, I have to give my disclaimer. Nothing here is financial advice. It's only for entertainment and educational purposes only.
Like I said, guys, don't take
please
it as
reach out to
advice,
Digital Ascension Group or Digital Wealth Partners, which is one of our subsidiaries. It is an SEC registered RIA to help you make financial decisions for your crypto portfolio. So let's get into it. This is the fourth video that I've made about the domino theory. About 21 months ago, you can see the first iteration of that right here. Go check it out if you haven't, and that way you'll have better.
By the way, guys, if you want the links to the videos, let me know down in the comments below. I'll make sure to send them to you directly so you've got them. But if you type in XRP Jake Claver domino theory, it should just come up on your feed anyway.
Context for this one. We're going to go over everything at a high level here and the few things that have changed and where we're at today before all of this takes place. So at a high level, here are the steps that I believe are going to take place. So if you've been living under a rock, which most of you haven't, you're probably watching the news and you are aware that Iran is having a complete meltdown and crisis over there, a change in regime, there's instability in the region, and we have a lot of geopolitical things going on with the US and Venezuela and China and Russia. All of these things culminating in a way that could and likely will rise the cost of oil globally, but mostly coming out of the Middle East. The chart that I'm watching closest is the Japanese yen versus oil. The escalating events are going to raise the price there. I don't know if that's going to be from them shutting down the Strait of Hormuz, or if oil is going to get shut down, or, you know, they blow up factories, or...
By the way, just so you guys know, Donald Trump did threaten Iran this week. I think he gave him a deadline of today. So anything could happen whilst we're going live. And basically, he says that Iran better come to a peace deal, otherwise they will block off. They'll send their bombers and planes, and they'll start bombing the oil rigs and oil ships. And if they do that and block off the channels so oil can't leave and in out the country, that would cause oil to spike in Japan, which then increases the Japanese rates and allows the domino theory to play out. But I'll let you guys hear it from Jake himself.
Refineries, I don't know what's going to happen. My anticipation is that we are going to see the spike in oil, and that is going to be the straw that breaks the camel's back for the reverse carry trade. If we see a 20, 30, 40% spike in oil in a very short period of time, which we've already seen a 5% rise here in the last couple of days, this is going to have significant effects on Japan. There's going to be inflation, there's going to be currency risk, and they're going to have to raise their interest rates. This is not just a spark, it is a fire that's going to happen. Japan's import costs on their energy is going to...
By the way, if you guys are wondering why is Japan, why is Japan the main key factor in here, is because Japan just recently, I think it was end of last year, around November time, December time, they have officially announced where they will stop printing Japanese yen for free after 35 years. And they've started increasing interest rates on the Japanese yen. So what that means is if the interest rates go a bit higher, so when oil spikes, the Japanese yen will have to increase rates, and what that will do is in the 35 years they were printing yen, over $34 trillion was, well, 34 trillion in monetary value was injected from Japanese yen, converted to USD GBP and invested into different assets globally. And when the rates go up in Japan, that will allow every position that was opened since then to be able to be liquidated from the US markets, the European markets, bonds, stocks, gold, silver, you name it, and crypto, liquidated to pump back into to convert it into Japanese yen to start paying off the loan and the interest on it. And what that will do is, because due to the volume of monetary value going quickly, rapidly switching from A to B, that would cause the black swan event to happen, a global financial crisis, because the forex exchange markets would not be able to facilitate that much volume, and that's what would cause the global event to happen. One, all the monetary value would leave from those markets and back into Japan, and number two, the conversions to be able to convert GBP to JPY, to USD to JPY, the FX market itself would collapse and crash, which would shut down SWIFT completely for the next 12, 24, maybe 48 hours, which means no one could transact whatsoever. So just so you guys got some backstory and understanding of why Japan is a main key component in this sector.
To go up substantially, and higher costs are going to be felt across their entire economy. They already have significant inflation. This is just going to exacerbate that situation, and it's also going to cause the Japanese yen to become weaker in the global scheme of things. The only way that the Bank of Japan is going to be able to combat that is they're going to have to raise interest rates, and that's where the reverse carry trade is going to become compromised. Over the last 3 decades, we've had trillions, tens of trillions of dollars borrowed in yen, and that money was taken and invested. It's in treasuries, it's in stocks, it's in private credit, it's in gold, and it's in crypto. Whatever you can think of, it's tens of trillions of dollars. It's not going to matter where you have your money. There is going to be a liquidity crisis that sucks liquidity out of that investment. And that only stays working as long as Japan's interest rates stay low. We've already seen their bond rates rise to the highest that they've been in 3 decades across every single one of their bonds. So the 1 year, the 2 year, the 5 year, the 10 year, the 20 year, the 30 year, the 40 year, doesn't matter. Some of them are at the highest amount that they've ever been. And right now, people are already getting margin called, but they believe that they're going to be able to, slowly issue their way out of this. If there is an event that occurs that is not on their roadmap, that's outside of what they believe, you're going to see a rush for the door. And that is going to happen when the Bank of Japan has to aggressively raise interest rates on the other side of oil spiking. Borrowing yen gets very expensive in this situation, and the carry trade stops working. Positions must be closed. And this is mechanical, it's not emotional. When the carry trade unwinds, people are going to sell whatever they can to move toward the safest thing in their mind, which is likely going to be Japanese bonds in this situation. That means that US treasuries are going to get sold off to the tune of $1.6 trillion that's held by Japan and potentially the other parties in the BRICS nation that still hold US debt, around $2.3 trillion totally. When that many treasuries hit the market at once, prices fall, yields rise, liquidity dries up. And this is dangerous because treasuries are the backbone for banks, pensions, institutions, money markets, stablecoins, everything. If the US defaults on their treasury obligations, the whole game is over. And right now, it's designated as a tier 1 asset by the BIS.
What that means as well, guys, if you don't know, is US Treasuries, all banks have to have money in some form of treasuries to be able to open a bank, because it's like pile of liquidity they need to be able to meet their meet their guarantees for the loans and stuff like that have given out using their bank. So that's why.
US has defaulted twice in its history. But in this situation, I think they're going to be able to make good on everything. Stablecoin regulation, which was passed in 2025, is going to be the key here. We're going to see stablecoins not just as a crypto tool, but the major banks are going to use them to be able to stabilize the treasury market. They're going to be issuing stablecoins and buying those treasuries to be able to back them. In 2025, there was about $50 billion worth of stablecoin trade. As we sit here in January of 2026, Tether's total market cap is around $190 billion, with $135 billion of that coming from US treasuries. The rest of that comes from other assets like Bitcoin, gold, and other bonds that make up their balance sheet. This makes Tether one of the largest treasury buyers in the world. The reason that the US government has allowed this is it creates demands for US treasuries. As China and Russia have sold off their bonds over the last 5 and 6 years, Tether has been there to soak those up, and it helps stabilize the bond market. It moves stress off of the traditional banks or the
By the way, also, just so you know, Tether is actually the biggest gold holder in the world right now, and Tether is also the weakest it's ever been. So, and I believe they've just filed for USDCT. So what they might end up doing is transferring all their funds from USDT to USDCT to be able to facilitate Tether's collapse if it does collapse. And the only way it collapses is by oil prices spiking, because Tether, like I said, it's at rating 5, I think it is, which is the highest it's ever been, and that's basically just means it's the weakest it's ever been.
Had to print money to buy those bonds back. The banks just aren't going to be strong enough when all this plays out. They're already sitting on huge unrealized losses. The long-dated bonds that they have, commercial real estate, equities, and these losses are unrealized, but they are still very, very real. And US banks have hundreds of billions of dollars in these unrealized losses. Banks won't be able to absorb unlimited amounts of stress, and their balance sheets are going to crack under this pressure. Tether, I do believe, also is going to have problems in this situation because they have those other assets on their balance sheet. About 30% of Tether's balance sheet is made up of other things like Bitcoin, gold, bonds, and other private credit that they've issued. If we see a global margin call, all of those assets are going to be affected. And if we see, 20, 30, 40, 50% down in those assets all collectively together, Tether is going to depeg. They hold around 100,000 Bitcoin on their balance sheet today and over 100 metric tons of gold. These assets seem safe, and they are today. But in this crisis, they will not be. Everything becomes collateral. Bitcoin sells off, gold sells off, redemptions spike, and the peg will be tested. And this is where Shane Ellis's theory may come into play. Bitfinex and other exchanges use large amounts of Tether as their liquidity provider. If they don't have access to that, or what they're drawing down isn't worth as much, they're going to have to find another source for that liquidity. And potentially, there's only one thing that could be, and that's XRP, because of the pairs and the adoption that it has and the speed for settlement. Like, that's the piece. You might be able to use Bitcoin, you might be able to use ETH because of their market caps, but with XRP being the third largest market cap today in crypto and having the fastest settlement and cheapest cost to move money, it becomes that liquidity source when Tether.
By the way, just so you guys know as well, the XRP blockchain utility, if I was to send you money right now, say on Friday, you wouldn't get it using Swift system. You wouldn't get it till about Tuesday latest, maybe Wednesday itself. And also that would cost me I think between 5 to 3% in fees, which is a lot when you're transacting with institutions of millions and billions of dollars or pounds or yen or whatever it may be. With XRP, if I send you something now, you'll get it in 3 to 5 seconds at the fraction of the price. So if I send you 10 million across, you'll get it immediately if I'm from the UK and you're in Australia. But also, it only costs you between 50 cents to $1. The gas fees to send money using XRP as a utility is second to none. It's a no-brainer. That's why XRP has the utility to facilitate the FX market when it comes for all those people who loaned out yen to be able to liquidate a position and convert it back to Japanese yen. That's what will facilitate it. That's why XRP is a key component in this global crisis to, one, prevent it from happening, and if it does happen, then obviously soften the blow, essentially.
Pegs. The other piece is stablecoins only work if people trust it. If redemptions accelerate and liquidity tightens, spreads widen, and market makers step back, this is going to create fear around Tether. It's going to be like somebody yelling fire in a theater. We saw this happen with FTX. We had Binance come out and CZ say that he thought that they, couldn't meet their redemptions. And sure enough, when people started redeeming at scale, they weren't able to. Banks are in the same position. They do not have the liquidity reserves in order to be able to back all the redemptions. Fractional reserve lending, they're holding 10%. FTX actually had more than 10%. They still went under. But that's a different story. What I'm saying here is that when stablecoins are tested, like Luna or others, if they don't repeg quickly, the confidence is lost and there will be a downward spiral as people redeem the assets from them and they're not able to meet those obligations. Many crypto exchanges rely on Tether and its liquidity. When stablecoins are stressed, trading is going to slow, order books are going to thin, and withdrawals are going to become delayed. So if you're holding your assets on exchanges or you're wanting to make trades while this situation is playing out, best of luck to you. I don't know that it's going to be possible. Liquidity is going to disappear very fast. And if there's not a solution that steps in, markets are going to lock up. As soon as there's headlines about this, contagion will spread and the market plumbing will lock up. MicroStrategy, these other treasury companies, and Bitcoin ETFs will become forced sellers. In panic, institutions will sell what's easiest, and that means ETFs. Investors will be redeeming shares, authorized participants will be selling the underlying asset, Bitcoin will hit the market, price will drop, and more redemptions will follow. It will be a negative feedback loop that continues to force selling on Bitcoin. I think we could see a $20,000 Bitcoin when all of this plays out. And XRP will be the solution that saves this and keeps Bitcoin around over the long term. That also means Bitcoin ends up on the XRPL. So let's talk about the stock market. The settlement is going to be a problem. They have these ETFs, they have this exposure, Bitcoin settles close to real time. The market still settles T+1. That happened on May 28th of 2024 with the option to settle T+0 using a digital asset. And they have trialed this and finalized that project in 2022, August of that year with Project Ion. R3 and the DTCC built a system to be able to settle and reconcile the back-end trades on the stock market from the exchanges to the clearinghouses. And this just so happened to be what the president of NASDAQ was talking about with Monica Long in 2025 at Swell. She was interviewed and she stated that the first place that they're going to be implementing distributed ledger technology is going to be for the back-end settlement reconciliation of the stock market. And if trades can't settle, counterparty risk explodes and margin systems will fail. So they will have to move to something that has instant settlement. And the only way that is going to be possible with XRP or any other asset is if there's enough liquidity in that asset. You need instant settlement. You need no counterparty.
Later after this video, we're also going to talk about what we have heard from NASDAQ announce that they've announced 24/7 trading as well. So we'll dive into that a little bit right after this video to give you an example of what that looks like.
Party risk, you need no pre-funding, and you need global movement of that value. It's not speculation. It is the infrastructure that we're going to move to when all of this plays out. In 2025, we did see the launch of the XRP ETFs. The majority of the volume to date for those, we saw a strong rise in XRP in late 2024 and throughout 2025. It continued to, trend sideways somewhere between $2 and $3 for the majority of the year. That's sustained volume from these institutions buying XRP using TWAP or VWAP to be able to average into the market with large buys. And if they are issuing larger orders or don't want that to impact the market, they will go through the OTC desk or the dark pools. Unfortunately, there's only so much available supply for XRP on the market. Institutions, Ripple, other enterprises, and retail are holding XRP and not selling it. And because of that, the available supply becomes less and less every single day that these ETFs continue to eat it up off the market. At some point, the OTC desk and dark pools will be out for available supply there, and the volume will have to move to the exchanges. I believe that we're going to see BlackRock issue an ETF when
obviously the OTC also stands for over the counter, in case you guys are wondering. So it's basically buying directly from the supplier.
the time is right in order to be able to save this system. They will have to move to instant settlement on the back end of the stock market, but they need enough liquidity in XRP to do that. And the only way to get the price to the levels it needs to be is huge amount of demand all at one time. You're going to have the FX market impacted. You're going to have the stock market impacted. You're going to have Bitcoin impacted. You're going to have the exchanges impacted, and the volume and demand from these ETFs and those buyers. With not much available supply for XRP, if you took economics in high school, you understand supply and demand dynamics. The supply for XRP is going to be, I think less than 1 billion. That's my best guess based on conversations and things that I'm seeing. It could be more, it could be less. But that's what I think we're at, here in the beginning of 2026, left on the OTC desk, dark pools, and the exchanges. It really could be even as little as 100 million XRP, but there's no way that you can look at the on-chain analytics and be able to discern that. You're going to have to talk to every single exchange, OTC desk, and dark pool and get verified numbers if you really wanted the correct amount, because the on-chain analytics just show you what's sitting in a wallet. It doesn't show you the overlying accounting mechanism across all these parties. So with all that said, it really won't take that much volume on XRP. If there's only 100 million XRP left to be traded, you would only need at today's price around $200 million worth of interest or buying pressure on XRP before all of that was gone. And then price would gap up to where people were starting to sell on their XRP onto the market to be able to meet that demand. And if there's an insatiable appetite, price will gap significantly higher than people anticipate. And that is where people will be willing to sell their XRP, and enough will come onto the market to be able to meet that demand. And that'll be the new price on the market for XRP, which will also allow the back-end settlement of these systems. The FX market will then be able to use it as a liquidity buffer as all of that yen flows back in to the Bank of Japan, or those other currencies swap back to yen to be able to repay those loans. There's going to need to be something there that's a decentralized exchange between those currencies at scale. Otherwise, the FX market's going to lock up. Same thing on these exchanges. If Tether depegs because of the reverse carry trade unwinding, there's not going to be enough liquidity for them to settle between all of these currencies. They are also going to need a DEX or a bridge asset to be able to settle those pairs. You've also got the back-end settlement of the stock market. You need something between the clearinghouses and the brokers to be able to de-risk from those Bitcoin positions and the other stock positions real time for these investment banks to mitigate those losses. And ideally, they're holding something like XRP on their balance sheet that allows them to rebalance their assets and liabilities. And again, a lot of this is speculation, but at the end of the day, I don't see another option out there that fixes all of these gaps that are going to occur in the market. XRP is designed to move value instantly, bridge currencies, and reduce settlement risk. Japan's going to face the FX volatility as capital rushes back across the borders. And XRP could act as that buffer, not a reserve. During this crisis, OTC liquidity is going to disappear, dark pools are going to dry up, and the trading is going to move onto the exchanges. If demand spikes and supply is thin, price becomes the clearing mechanism. And realistically, XRP is going to have to be somewhere between 3 and 4 digits in order to be able to facilitate the liquidity requirements necessary in this situation. In closing, hopefully you have a better grasp and understanding of what all this means. We are at a point in history where the entire infrastructure for the financial system is about to shift. When I say this is a once-in-a-lifetime opportunity, I don't mean that lightly. People will tell you, oh, there's a bunch of once-in-a-lifetime opportunities. This literally will not happen again for the next 2, 3, 500 years. This levels the playing field for all of the sovereign.
So yeah, as you guys can see, Jake has truly believes that XRP could be the solution to this massive global problem. Now, a lot of you wondering, well, how do we get to this position? And that's because globalists, people with power, people make decisions but don't foresee the massive theories and how things impact them at the later date. Like same with the 2008 crash, with the mortgage principles when they came in, the mortgage rates, they were all due to be renewed at the same time almost, which caused the collapse in the first place. So yeah, that's just one of the things. What else I wanted to show you is the current price of XRP at the moment is we're sitting at $1.77, which I think is about £1.21, if I am correct. So if I'm incorrect, please correct me on that. But that's what we're currently sitting at. As you can see, everywhere has been collapsing. If we look at the daily chart, obviously gold has been gapping, and the last 2 days we've had amazing, like a lot of sales off. We went under 5,000, which is crazy. And then on a weekly time frame, obviously we have closed with a massive wick towards the top, which could indicate that we are now reversing. So a lot of people will end up selling. Same with silver and gold almost move simultaneously on charts. You can kind of figure out SMT divergence from them too if you analyze and day trade. However, gold and silver have basically both been selling off. This is why gold and silver had hit an all-time high. Like silver hit an all-time high of 121 and gold hit an all-time high at 5608. I mean, if we look at the monthly chart, gold is due to collapse and to basically reset, and we're probably looking about 2,000 price range, £2,500 price range for gold to retrace to. So we're probably looking about 40 to 50% haircut on gold, and then same likewise for silver. You're probably looking about $30 to $40 silver. So again, 50 to 40% haircut on those two. Silver apparently largest downturn since 2008. There you go. Don't know if that's true, but if it is, then that's crazy. Absolutely bizarre. But this gives you a good indication of what's coming. And why is this so important to you? Because you should worry about these things. Because at the end of the day, if you have an ISA or if you put away a percentage into your stocks and dividends account or all those other things, like your bag will be minuscule. I don't know who your broker is or what platform you use. Your position might get liquidated, so you might lose your shares, you might lose your positions, depending how you put them on. And it's just something to be very cautious of, because this will also impact if you're an investor. It's important to know. If you are in property, this is also important to know. Now, what I wanted to jump on and discuss is the future of crypto and the blockchain and how that will impact your business and also your investments. So what blockchain is now doing in America, especially, they are just due to pass the Clarity Bill, which basically gives regulations to allow US innovations to flourish in the US. And this, where we're heading to the new digital system, and blockchain is basically your new internet. I don't know if you guys know, when the Telephone Act came into play, once it was passed, the next 3 or 4 years they were on an app, like everything to do with the internet was on an uprise. Everyone was said it's not sticking around. However, the big institutions and people who are innovators knew something was happening, and you would have made jags of cash. I think it was like 1965 or 1970, something like that. If I'm correct me if I'm wrong. If someone could do some research on that, that'd be great. However, we're in the same era of that happening. So a lot of assets that you see, like stocks, the companies you invest in, S&P 500s, NASDAQs, all those assets, silver, gold, fiat currencies, etc., everything will be tokenized digitally. Property, everything you can think of will be digitalized on the crypto blockchain. Now, why? Because, almost knocked my drink over. Because a lot of these things, stuff on the blockchain allows efficiency, less fees, and also transparency. Right now, when you do business from banks, say with Barclays, and then you want to send money to Australia, your personal data travels through so many, just knocked the mic there. Your data travels through so many different people, and that's why a lot of people are able to sell your data. With crypto blockchain, you are protected, and it protects you and your identity and all your data. However, it does allow the governments and the banks and yourself even to know exactly who is transacting and where the transaction is going, and you can track it a lot easier because it's all digitalized. Now, some of you may have an argument, it's all online. What if the internet cuts out? Some ledgers do allow you to transact offline, and it all updates once you are back online. So even you can still do business offline with crypto, which is the beauty of it, because it's on the blockchain, separate entity, no one can control it, which is beauty. So diving in today, XRP ETFs have seen a highest volume. Now, please take this into consideration, because over 74 million was bought of XRP ETF. Now, bear in mind, everywhere you look, we are red, okay? The market's down, crypto's down. However, XRP ETFs had the highest inflows to date. Now, if that doesn't tell you something, I don't know what will, but this is a good indication that maybe XRP as an asset is not so silly to invest in. Now, before some of you go, oh, well, why is it still so cheap, etc., etc. Well, I don't know. The one thing I can know is that a lot of institutions, Ripple, etc., will be working behind the scenes to be able to basically flick the switch. That's all we're waiting for. We're just waiting for that flick of the switch. And once we do, we'll see XRP, as predicted by some people, rise to phenomenal numbers, 3 digits, 4 digits. I mean, the possibilities are endless. So there you go. Also, this is just to give you an idea what the Japanese carry yen is. So please have a listen carefully, raise the volume up. And this video is a really good indication of what the reverse carry trade is.
This could explain the next big move in crypto. For years, investors borrowed cheap Japanese yen and poured it into higher yield assets around the world. Now Japan just raised rates to the highest level in 30 years, and that trade is unwinding. That means trillions in capital being forced to move, assets getting sold, global liquidity tightening fast. In moments like that, speed matters, and that's where XRP comes in. XRP is built for instant, low-cost settlement, no pre-funded accounts, no waiting days for money to clear. Japan already has deep ties to Ripple, with major banks integrated into real payment rails. Add in Ripple's government partnerships, central bank pilots, and new U.S. crypto laws bringing clarity. You start to see why many believe XRP could benefit from a global liquidity reset. Short-term volatility is likely. Long-term, I'm extremely bullish on XRP's real-world utility, not financial advice. Just follow the macro.
There you go. So hopefully that gives you a good indication of the reverse carry trade. As Jake Claver said before, Japanese bonds have risen the highest they've ever been. So they've absolutely smashed previous highs completely out the water. And this is another indication of what is happening in the world, why the reverse carry trade is a thing, and how this could really impact you greatly. So this is just some data and statistics so you guys can have a look at it. Just to give you an understanding of what Clarity Act is, to give you a better explanation. So in the US, the basics is the Digital Asset Market Clarity Act is a US bill aiming to set clear rules for crypto splitting oversight between the SEC, securities like assets, and CFTC, commodities like tokens. SEC is a Security Exchange Commission, and the SEC in the US is huge, and they're known and prone for suing people. Ripple had a 7-year ongoing battle with the SEC, and they've managed to win the case in 2025, which allowed them, they won it early 2025, which allowed them to flourish throughout 2025 and getting partnerships in place with companies in the US to be able to position themselves accordingly when the unwind carry trade plays out and the global crisis occurs. Key focus regulates stablecoins. Example, via payment issuers, defines digital commodities like meme coins, network tokens, and provides exemptions for DeFi devs if decentralized. So that's that. Why it matters: ends regulatory gray zones, boosts innovation, protects users, but critics worry about overreach on yields on DeFi. So right now, the main issue with crypto bill is that people, people in America don't want to provide their people with being able to earn yields of crypto assets. And what that means is if XRP goes to 10,000 a coin, or 10,000 a unit, should I say, I, myself, and my girlfriend and my family would be extremely, extremely wealthy. And what we can do is we can put it into a account manager, essentially our XRP, and allow them to use our XRP to produce as a yield of 5, 6, 7%, which then would allow us to basically retire for the rest of our lives. And they're trying to stop that from people having that. So that's that. Current status: passed House in 2025, now in Senate, AG, and Banking Committee markup ongoing. Potential vote soon amid stablecoin debate. This ties in quite well with Monday's meeting. There's a big meeting on Monday with crypto, regarding crypto, with Brad Garlinghouse, the CEO of Ripple, Donald Trump, and the new chairman for Fed, which he's called Kevin, I believe, if I remember correctly. The potential impact: could mainstream crypto if passed. Watch for compromise on interest rewards. Regulation clarity incoming. What's your take? So yeah, once the US gets, because US is one of the biggest financial hubs ever. Once the US Clarity Act passes, the potential for future developments in the space and more is crazy. Anything could happen. Do you know what I mean? Like, anything could happen. And if you truly think that Swift will stay around and still be the face of payments, you are absolutely silly, because you will not even realize you're using crypto until you're using crypto. It'll be a simultaneous change. It'll happen so quickly, it'll blow your mind when it does happen. By the time you hear it in news, it'll be too late. So how this will affect your businesses and investments? Well, if all the things get digitalized and on the blockchain, what that means is that a lot of companies, stocks, bonds, golds, metals, etc., commodities, and also FX, you'll be able to trade them 24/7. And NASDAQ just announced that they will be able to trade 24/7, as well as S&P 500. And that affects the way you trade. If you do trade, that affects your investments, because now people will have access 24/7, not 24/5. And that means any news that happens over the weekend, if Donald Trump's still in power and he decides to put out a Truth Social tweet or something, anything could happen. Everything could be affected. But it's also great for retail investors, because it gives you a bit more control and clarity as well as on that. Also, if everything gets digitalized and tokenized on chain, that gives you obviously efficiency, stability, but also affects the way you transact day to day, depending which sector you're in. So please, please, please do some studying on this matter, on blockchain, how it works, what it is, what products are out there. The couple of ones you should watch out for that will probably be the key factors heading into 2026 all the way to 2030 is Flare. Flare is a crypto project which allows you to produce smart contracts. XRP, which is the XRP ledger, the decentralized middleman. You've got Solana, which you guys most know about, Ethereum, and those are the main four that I would focus on. Bitcoin is Bitcoin, it's digital gold. Bitcoin doesn't have really much use apart from store of value, but utility-wise, Ethereum, Solana, Flare, and XRP is something you should focus on. So hopefully you guys have managed to get some value out of this, bit of understanding, bit of what's the word I'm looking for? Bit of understanding, and also a bit of clarity of what's going on and what to prepare for. And if you do want to prepare, great. If you don't, then look, it's up to you. Like I said, this is not financial advice. This isn't advice at all. This is just me sharing what I know, what I've been studying, what I've been looking into. There's a lot more other things to look into. However, it's not me to babysit you. It's your time to do some your own due diligence and be able to, do what's right for you and your family and the way you position yourself. So yeah, thank you so much. Without further ado, if you could make sure to leave that like button, subscribe to the channel, and I'll catch you guys next week.